Tensions in North Korea are escalating, and the Eurozone is dealing with both new and ongoing troubles. What impacts will these events have on financial markets, and will the uptrend in risky assets, particularly equities, remain intact? With us to discuss the search for yield is Anja Hochberg, Head of Investment Strategy at Credit Suisse. Anja, various parts of the world are still faced with crisis. How can investors best approach these ongoing risks?
We actually live in a world of structured change and the need for rebalancing. That creates opportunities, but of course also risk. For the investor, that simply means that the need for a well-diversified portfolio is even bigger and that he actively uses the opportunities that arise in the market. The current tensions have been intensely discussed by us in the investment committee. We have unanimously decided that we think that the current risks are not able to meaningfully derail the current market rally, so we therefore stay overweight equities.
Amid the tensions and the turmoil, and as the first quarter earnings season comes to a close, which asset classes provide the best returns for investors now?
Well, we are convinced that the global economy continues on its way up, even with a tiny little soft patch in the next months to come. We even would expect monetary policy to be supportive as it was in the last couple of months, even if not more expansive, for instance, in the case of Japan. This is normally this bodes well for equities, and especially if it is supported by undemanding valuations, especially if you compare them with bonds. So we prefer equities, and we also are overweight emerging market bonds and high yield bonds versus government bonds.
And speaking about equities, we're approaching May. Is this sell in May and go away strategy going to be the right one for investors this year?
Unfortunately, life isn't that easy. If it were, we would be producing calendars and not asset allocations. Admittedly, May isn't the strongest month in history, but remember we are in an intact upward trend. So a slight weakness, I think, doesn't do us any harm. On the contrary, I think we cannot simply abstract from the current supporting environment there. So we advise people to stay invested in equities.
And what about foreign exchange? You touched on Japan. How will the Bank of Japan's recent monetary easing measures impact markets?
I think they have now seriously engaged into the monetary policy easing game. This has already affected the yen. It has weakened very dramatically, and we would even say it has the potential to run further. However, to which degree, the new policy will be able to tackle the serious structural problems in the Japanese economy will be seen. We are very closely watching, for instance, the earnings trends in the Japanese economy. Our current investment advice would be not in the global portfolio, not to underweight Japan.
Commodities have come under pressure in the last couple of weeks. How can investors best position for this rough patch?
We are convinced that commodities are a very important part of a long-term investment strategy. They profit from the structural change in the world economy, they profit from the impact of the emerging markets. However, currently the global economic demand, or the demand for commodities, is not as strong to really create a buy-on rally there, especially as the chances for equities are very much intact. So we would expect commodities to lag the equity rally. However, for investors, that would mean stay prepared and enter the market when you see a market low.
Thanks, Anja.
Welcome.
For more information on market movements and global trends, check out the News and Expertise section of the Credit Suisse website.